Good morning, traders and investors. We got another great show for you guys here. Pre-market prep, more trouble ahead for Bitcoin. Elon Tesla, Mongolian talk expansion, Priceline and Google AI partnership, AI community making a terrible mistake by Ken Griffin. We'll talk a little bit about that. Stitch Fix earnings, Dave and Buster's earnings. And we also can see out there that we're getting some price raises out there. We'll take a look at some analyst ratings. We got Ryan Craver on today. We'll get into some Amazon. And of course, I wonder, could tonight GameStop maybe talk a little bit about some AI? Let's get into the action. You guys know where you're at. Pre-market prep. Hit the like. It's time to rise and shine, traders. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel O'Connor.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, investors. Let's get to the action. Let's take a look. You guys can see the S&P 500 kind of climbing and just staying up here at the top of the range. Definitely hanging in there. I did see a mention in the chat about the Qs, a little pullback there, and not the biggest move, but we do see it kind of hanging on here. TLT at 102 and kind of holding on, of course, looking to see if the daily trend can start coming back. But not looking good there in the TLT. And then when I take a look at crude, I'll put USO, but of course I like taking a look at WTI at 72.50s and holding well above the 72.50s. I'm going to take a look today to see if we can crack back below the 72s on WTI. And then, of course, you guys are seeing issues there in Bitcoin. That's something to keep an eye out. We'll talk a little bit more about that coming up. But let's go ahead. Let's bring on my man, Dennis Dick. Let's talk a little bit about the market. And the first question that I have to you, Dennis, is why is the rally holding here?
Okay, we're going to get into that in 1 second. I just want to clarify something which we haven't clarified for a bit here. At 8 a.m. Eastern, you have a lot of off-exchange trades that hit the tape. Some of these are trades that are just getting late reported. I don't know why it's always at 8 o'clock, but if you see, the sudden market drop, it's actually just the 8 o'clock off-exchange trades hitting the tape, and they're not, and sometimes it's at the closing price often. They're not real time. So if you look, it looks like it dropped at 8 o'clock, the QQQ, and then went right back up. That is actually not the case. All of those trades were on FINRA. So you see this every day at 8 o'clock where you see trades that hit the tape that are actually delayed and just getting processed at that time. I don't know why they process some of them at that time, but they do. So at 8 o'clock, you see some funny stuff, but those trades are not real time. Their previous trades is probably getting reported late. So the real market on the QQQ is not down at 354.84 like the sudden drop. It never traded down there at 8 o'clock. Those are late reported trades, so 355.44. So we're actually up 60 cents. We hardly moved at 8 o'clock. But, if you're seeing, your P&L go funny, it's those off-exchange trades on individual stocks as well that hit the tape at that time. So just ignore that stuff.
All right, so let's get back to the question here. The question that I was asking, and I think it's an important one. We've been seeing the rally kind of hold here.
Yeah.
Why is this rally holding?
Well, and let's bring up the tweet here, and it's a good tweet. So we're going to bring this into a long discussion. Something that we have been saying for a long time on this show, correctly, is that this rally has been 5 or 6 stocks, has been the majority of this rally. So fantastic tweet here from the Kabisi letter. I think I'm saying that right. The S&P 500, this is this morning, today. So the S&P 500, excluding NVIDIA, Apple, Microsoft, Amazon, Google, Tesla, and Meta. Those 7 stocks. Take those 7 stocks out, and the S&P is completely flat on the year. That means the other 493 stocks are up 0. That means there's probably 200 up. There's probably 200 down. So there is other stocks going up, but the other stocks going down. If you take out the big 7, though, we are flat on the year. So you could say, oh, maybe Dennis is going to start a bearish rant on this, but not so fast. If you would have did this stat about 3 or 4 days ago, the S&P would be down on the year. But what we have seen change dramatically here. Big Bill Blue Line in my chat here, Bill Baruch, who's on CNBC a lot of times, saying the same thing. We're seeing the IWM start to participate. And this is very, very bad news for the bears, because if we start getting broad market rally here, where the small caps and other stocks, value stocks participating, that is what is going to drive us higher. And the recent rally in the S&P by Microsoft and Apple, those stocks are barely up in the last few days. It's being driven by all the other stocks, the catch-up trade, which we've been waiting for, and we're finally starting to see. So Friday was the first day that we saw the IWM like, whoa, we're breaking out of this range. And then Monday, yesterday, it's like, oh man, gives back half of it. And you're thinking, here we go again, just going to give it back. But not so fast. The bulls have a case. IWM is with one of its best days, if not its best day of the year. And huge yesterday, huge day for IWM. Continuing here this morning, value stocks going up. I can see it in my long-term portfolio because you know me, I'm a value guy. My long-term portfolio has been underperforming, one, because it's got too much cash, but two, mainly because it's just balanced. And we know if you aren't just heavily weighted those 7 names, you're underperforming. But because my portfolio is more balanced, yes, I have Amazon and I have a couple of those names, but I'm too balanced. So now what we've been seeing is my long-term portfolio was breaking out in the last couple of days, and that's because of this broad market move. Other stocks participating, value stocks participating, IWM participating, General Motors, I'm long that. I talked about it, buying that down off that 32 support. It's breaking out here now. So you're starting to see other stocks participate, and that's very good news for the bulls and very bad news for the bears. Now, I know you look at the overall economy, inflation and all that, and you can say, you know, well, it doesn't seem that good out there. But I will tell you, the last 4 days have changed a lot, at least from the technical perspective on this market. Money Mitch, what are your thoughts?
Yes, definitely. And I could see it in the IWM for a while. Everyone was watching the IWM. Would it make the move, right? Well, there you guys see it. And now you can see that support underneath it clear as day. I mean, I'll show you guys what I was kind of pointing towards. Let's see if I still got it here. I think I got it off there. All right. So one of the things that I think is very important to kind of catch here is kind of this layer of support, right? I mean, look how we were just kind of sideways here. And this gave what?
Forever.
I think more than the opportunity for the institutions, the bigger traders to kind of load up down there at the IWM and really get this party started, right? And I think that just shows us how big the kind of the AI bubble is starting to get now, as we're starting to see kind of more of an everything rally versus just the AI names, right? We had the AI names before, but now if you take a look at it, it seems like we're starting to get growth names to start moving back up. Of course, still long ARKK. Look at it now, up to 43.
Yeah.
We're starting to get even. I even saw industrial names start to come back,
Yes.
like DE, CAT, right?
Yes.
That shows us more that it's kind of more an everything rally. Look at the KRE.
It
Look
all
how that's
changed
setting up,
Friday.
right?
It all changed Friday, Mitch. So take us back to Thursday, and a lot of these stocks were sitting near the lows. Everything changed Friday. We had the everything rally Friday, which we have not seen really in 2023. We haven't seen a lot of days where they're just buying everything. It all changed on Friday. Monday, hindsight capital is always 2020, gave you that opportunity to get into some of these names on a pullback here. And now, obviously, we got the continuation yesterday here. So, Mitch, you're absolutely correct here. It is now broad participation here. And that is what is driving us up, because here, let's look, at NVIDIA the last 5 days.
Yeah.
Well, it's down. NVIDIA is down. It's been one of your leaders. AMD had a good day yesterday, coming back a little bit. But, if you look at all of these other plays like Microsoft, not having a great 5 days. It's basically flat on 5 days. Apple, basically flat for 5 days. Tesla's its own animal right now. We'll get to the story in a minute. That stock is just marching right now. Amazon's been marching too. The march hasn't slowed down. So some of the tech's still going. But when we look here, so many of those sleepy names that you were talking about, Deere, Caterpillar, industrials. I mean, this is a broad-based rally here happening here right now.
Even
and that is the first time. So, and I've been in the market neutral camp because I'm like, well, there's so much non-participation here. Well, now you got to be full on buying dips, I think, because you now have broad participation happening here. So again, yesterday would have been the day to buy, probably not, after we rallied 3% on the IWM, because always seems like there's another headline to knock us back. But I think you still have to have your shopping list, and you still got to be buying dips. And I've been doing it lately, and I haven't looked at my portfolio, but I'm sure I'm down to about 45% cash. I bought like General Motors, I bought Amazon a while ago, AMD, Airbnb. I recently bought Salesforce.com CRM on the recent
Nice, you
pullback
did?
here.
I like that one.
I'm just going, through a number. I bought Upwork, UPWK. I talked about that one. It had a day yesterday, along with Fiverr, Spinner, and obviously, we had, the Fiverr. We had our guest coming on there last week, Sean Emery, who was, fantastic guest, by the way, and he was talking about FBRR as a sleepy AI play. And, since he's been on, Fiverr's up $2 straight. So, I mean, that's, a turnaround there too. I'm in Upwork. It's similar. I've been saying my target on Upwork is 10. I bought it about 8:30, I want to say. It's 9:20 here this morning. So I think my target is still 10 on that one. That was more for a trade. But there is opportunities here now to be looking, a little bit further out. You talked about ARKK money, Mitch. We've talked about ARKK, the quad bottom that it made back there in the middle of May, and then it came back down to test, and now it's moving up. And, good trade here, money, Mitch. I mean, at a certain point in time, you got to, we're still in this market where it seems like ringing the register is the prudent thing to do. So it's hard to just get married to any of these positions. But right now, bulls in complete control.
Yeah, and just to give an update of my action from yesterday. So what I did was I kept the ARKK. I haven't taken any profits in that, but I had to run towards my profit in NCLH because it just was too much too fast. 20%, over 20% gain here on Norwegian in like 2 weeks.
Nice trade,
I got to take it and run.
Yes, I agree.
So it was a really nice trade there. We'll see what happens on trades like this. But for right now, I even took some profit in Square yesterday. I kind of had to. It's just been
I'm still in the Square.
too fast.
I'm looking at 70.
Yeah, I agree with you,
I'm
Dennis.
thinking
That's
about
where
70.
That's where I want to kind of
these,
take it.
And I've bought some stocks in the long-term portfolio, like when I'm throwing in Amazon, even AMD. Those are long-term. But then I've been buying other stocks just on pullbacks here because I feel like there's going to be participation, like Upwork and Squares. Those have a shorter leash. I've been in Square for about 2 weeks here now. Target 70. I've been in Upwork for, the better part of a week. Target is 10. I mean, you got to have some targets here. And I think if it gets up and hits your targets, it's not a bad idea to take some chips off the table. But, Square turning, I talked about PayPal. I'm not in PayPal, but I feel like I'm participating through Square. It's starting to show some life perking up. Is there room to 70? I think so. Again, we know the rug can get pulled at any time. We get, a bad inflation data point next week. Is it next week? I keep forgetting. Next week, CPI 13?
Next week, and also FOMC next week.
Yeah, so, we could get, but we have some room here for the next few days, in my opinion. But rug pulls happen. Anything can happen. It could be a China headline. Right? It could be so many different rug pulls. So I don't think it's a bad idea to take some chips off the table at times. But again, I think if you're underinvested here, I think you got to be looking at pullbacks to get some money back to work, because where really the majority of stocks have been going sideways for the better part of 2023, that is not the case in the last 3 days. The reason that I started with that slide off the bat wasn't to make a case for the bears. It was to make a case for the bulls, because the reason, you've been rallying in 2023 is mainly those 7 stocks. But we haven't had those 7 stocks really going that much the last few days. We've had the broad market going the last few days. IWM, a great indicator for that. And now that you're getting IWM participation, and JC Peretz will give you a shout out there too, because he was talking about the IWM bottoming a couple weeks ago. And I mean, it looks, JC, like you may be correct here, because the IWM, and I am long, it's one of my biggest positions in my long-term portfolio because I feel like there's value there. And I feel like there is a catch-up trade here on the IWM, because everybody is, the forgotten, stocks here that are trading a lot of these things. A lot of these value names are trading 8, 9, 10, 12 times earnings. I mean, we can say how expensive this market is at 19 or 20 times overall, but you take out some of these crazy PE stocks there, there's a lot of value underneath the hood. There's a lot of stocks trading at ridiculously low valuation, including General Motors, which is why, I took a shot on it. It's trading like 6 or 7 times earnings. So, I mean, if you believe EV is going to be a play, if you believe we're not going into recession, not saying, we don't have a crystal ball and, we don't get married to some of these positions, information changes. We get more information that CPI is starting to go back up. We get more information that the Fed's going to get more aggressive. Well, that might change the narrative here. But as of this moment in time, bulls are back in control.
Definitely back in control. I just wanted to give a little shout out to the book club. Of course, what was the book club talking about 2 weeks ago off of those lows on the Sunday? We were talking in the book on, of course, candlesticks. We were talking about what? Rising support lines and how you could clearly see that on the IWM. This is a snapshot from the book club's presentation. So if you want to check out the book club, definitely recommend it. We talk a lot about patterns like this, and that's what we're working on right now. Let's pivot over. Let's go to a little bit of some Coinbase talk really quickly. I do want to mention it's not necessarily to Coinbase, but more to Binance here. Of course, Binance doesn't trade in the US here, but regulation here is really starting to get concerning as federal regulators say that they lack sufficient assurance over the safety of 2.2 billion of US customer assets, normally under the control of Binance US subsidiary. So is there more trouble ahead for Bitcoin?
It seems like it. It seems like the headlines keep coming here. I do, and I will say this, with crypto and Kramer's, calling a lot of these, cryptocurrency scams. I agree with him. I think a lot of scams. I think, more regulation, to Gensler's point, is a good thing for this industry. I do believe if you're playing crypto, I think you need to stick to your Bitcoin, Ethereum, and basically the big couple dogs. I don't know if it's Solana or anything like that. I don't go outside that. But I think there's still, a case for Bitcoin, a case for Ethereum. You just gotta be careful with all this other little stuff. And you got to be careful of where you're investing, obviously. If you're loaded up and all your money's in Binance here, I'd be nervous. I'd be nervous like crazy here right now. You don't want U.S. government coming and talking about, getting involved in regulations, seizing assets. I mean, this is all stuff is scary stuff if you're invested there. Yeah. So I think thinking if you're, is this a bad news for Bitcoin? Yeah, but it's more bad news for the crypto industry and all these other altcoins. Like Bitcoin actually was bouncing yesterday. Bitcoin was turning around here. I think there's, use cases for Bitcoin. There's use cases probably for Ethereum as well. I've said this for years, since all this crypto is there's, and I used to be long, and I'm still long a little bit of Bitcoin. I used to be long Ethereum as well. It's like Bitcoin, Ethereum, and then forget about the rest. That's kind of how I've been. It's kind of how I'm going to stick. I'm sure there's going to be a couple of people who hate on me and say, well, don't forget this one, or, this one's better than Bitcoin. But, what we've seen happen is that Bitcoin has held up relatively well, and a lot of these other altcoins have really gotten beat up. So I think if you're in the crypto space, stick to Bitcoin and Ethereum and be careful where you are invested, because we've seen, in the past here, obviously, with the Freud situation, and then you look, Binance here now, there just seems to be not enough regulation. So I completely agree with everything Gensler said yesterday. We do need regulation here to keep people's money safe.
And I think that with these comments, my concern would be if, of course, we saw how the bank situation went, right, with bank runs, will we see here a run towards getting that 2.2 billion away and getting it back to safety? That's one thing that I would question. Let's kick it to the next conversation here. We're going to go to Elon and Tesla. Mongolia talk of expansion. As you guys see, Tesla up today. You can go to the 15 minutes so we can see the action here. And Tesla's CEO, Elon Musk, and Mongolia's prime minister on Monday talked about potential expansions and investment. They discussed the possibility of welcoming Tesla to Mongolia for its electric vehicle battery factory, leveraging the country's wide availability of copper and rare earth elements, which are essential components, of course, of the electric car's batteries. This is according to a statement given to CNBC. They also spoke about bringing Starlink to Mongolia. So it looks like Tesla making conversations here with Mongolia for expansion.
I had a trading position on it just before you started talking, so I just got out of the trading position, so I can talk Tesla freely here now.
So you're telling me you took the gain, right?
No, loss.
Oh,
I was trying to play the short
I
side.
tried
took the
it. I
loss
tried
on
it.
So, yeah, small loss though. Small position, small
No
loss. Just
worries.
playing around. This was overnight day trading, so nothing like position trading. I still think Tesla. Sometimes, and here's the funny thing with trading: you can be bullish something, but you can still take little bearish bets within it. I trade Tesla all the time. It's just a good trading vehicle. It's always liquid. You can get in and out of it easily. Why do I pick on a stock like Tesla? Because of the liquidity. I can get in and out. You want to do 500 shares of Tesla, you can get in and out very, very, very easily, within like a nickel. And I pretty much at any time of the day. I mean, you go to some of these other stocks to trade, and it's by appointment only after hours. It's just not the liquidity. So, stocks like AMD, Nvidia, Tesla, it's almost like they're always open. So they're fun to trade and they're decent to trade because there's this little liquidity to allow you to get in and out of them. So, short term, day trading, I'm long Tesla sometimes, short Tesla sometimes long and short during the same day, just, a little choppy, just trading it like that. But I mean, overall here, Tesla's been on an incredible run. These headlines are incredible. Is it overextended? Absolutely. If I was investing in Tesla, would I buy it today? No, I think you got to wait for a pullback here now because it's just up too much too fast. The buying opportunity was at the David Faber interview. If you bought it there, you're up like 60 or 70 points here now. You're literally up like 40% since the David Faber interview when everybody thought, oh my goodness, Tesla, it's an AI play. And it is. And, and I agree with that. I think, Tesla still has a long road ahead. I think it probably ends up going higher here eventually. But I think you need a pullback here to get a better entry point.
All right, let's go to Booking here as they're announcing a partnership. Of course, this is Priceline with Google Cloud as Priceline and Google AI partnership comes into play. They announced Tuesday to bring artificial intelligence chatbot technology to the travel booking process. Don't know where you want to go? This tool will help you narrow that down pretty quickly. Priceline CEO Brett Keller told CNBC, and Keller said that the AI would help customers make more thoughtful decisions on where and when to travel and would also help his employees speed up on response time. Of course, Priceline is owned by Booking Holdings. We'll see if this can give them a little bit of a lift.
Everybody is trying to get an AI headline somehow. And this is just the way it is. And AI is going to be involved with everything. You have pure AI plays like NVIDIA, and then you have everything will have a little bit of an AI component. And companies are coming on and interviewing on CNBC and trying to drop the AI buzzword as much as they can, even if their company has absolutely nothing to do with AI. So don't think of Booking as an AI play. It is not an AI play. This is not. It is not lifting on this headline. And the reason for that is this is not an AI play. Now, can AI be involved in some of these companies? Absolutely. But are they going to make more money? Or companies going to make more money because of AI? I mean, if you start replacing humans, yeah, maybe in the short term. But in the long term, then you wonder, who's going to be doing who's going to have the money here? But, that's a bigger conversation here. But I mean, don't think of like Booking and all these other smaller companies that AI plays. The AI plays are the pure plays like NVIDIA. Obviously, Microsoft's going to be very involved. We know Amazon and Google's and Meta's are going to be involved. We've talked about some smaller AI plays, but when you're reaching. Booking is reaching if this is, trying to become an AI play. So, I mean, it's just everybody trying to drop the AI headline, and it's kind of almost getting to a point of ridiculousness.
This is where it starts getting into the conversation that, Ken Griffin brought up here.
What'd he say?
He's saying that AI community making a terrible mistake. Founder and CEO Citadel Ken Griffin believes that artificial intelligence will be transformative one day, but it's still in the early innings. I do think that the AI community is making a terrible mistake by being full of hype on a near-term implication of general AI, said Griffin. So what do we got to look into here is, of course, is one thing I will mention, though, Citadel is in the process of getting enterprise-wide license to use OpenAI ChatGPT. So
I don't even know what to say.
Is he playing both sides of the coin here? That's one thing to kind of keep in mind.
I don't know what to say on that. All I'll say is my commentary, and to a certain extent here, are we in a little mini AI bubble? Yeah, probably. Anne Marie
mini
Dan was
one?
hinting at that too. What's that?
A mini one? Did you say a mini
okay,
bubble?
a big AI bubble. Sure.
There you go,
but
man.
I'm gonna say it again. AI is for real. AI
But
is
it's
not
still
going
early,
away.
don't
Some
you
of these
think?
bubbles we've had in the past, go away quickly. This one is not going to go away. It's going to be here 2 years from now, 5 years from now, 10 years from now. Are we overextended in the AI talk? Absolutely. Is the hype over, powering and overextended? Absolutely. Do we need a pullback in some of these stocks? I think so. That's why I said NVIDIA, I said it the other day, I think it may have topped out. And it wasn't a great day for it yesterday here. I may be wrong, and maybe I regret that call today. Who knows? Because this thing just starts getting hot again. The next story could take it. But, right now, I think, I'd be ringing the register in a stock like NVIDIA just because it's gone too much too fast. Not shorting the stock because, and again, sometimes, maybe you could. I mean, if you're leaning on 400, I would lean obviously on the all-time highs because when stocks are making new all-time highs, you absolutely cannot be short them. We have made the all-time high in NVIDIA 6 days ago. We have been going up in the overall market, but NVIDIA is not participating here now. It feels like it's due for a pullback here. Maybe not to fill the gap. I don't know if you're going to ever fill that earnings gap. But maybe a challenge like that day, like the 366. Maybe you come back and challenge that area. And maybe that's your entry point. I mean, for me, the way I'm playing it is AMD because I feel like AMD and Lisa Su is going to be a big player here as well. And I also feel like there's a catch-up trade here because AMD's valuation is so much cheaper than NVIDIA that I just feel like that's the safer way for me to play it. So that's how I'm playing it. But I do think some of this AI hype, I do think we're overextended, and I do think we're due for a pullback.
All right, let's move forward to an earnings stock today. I'm going to take us to Stitch Fix as they rise on Q3 beat and cost-saving measures. Q3 EPS at a loss of 19 cents, beat the loss of 30-cent estimate. Sales of $394.91 million, beat the $388.94 million estimate. This quarter, we delivered an adjusted EBITDA of $10.1 million, exceeding our guidance range and significantly expanding our free cash flow, CEO Katrina Lake said in their report.
It's a stock. It's just too small for me to care about, really. I mean, is there life here? Is this one of those catch-up trades? Maybe, but it's a $4 stock. I mean, and we were talking about
retail,
this one,
right? I mean,
well, that too. And I mean, retailers are in the gutter. But again, we're in an everything rally here right now. So I mean, you have to be careful selling short anything right now here. Bulls, again, go back to our original conversation 20 minutes ago. Bulls are in control right now. What does that mean? It means shorts are having a tougher time. So you could say, oh, well, Stitch Fix major resistance at 4 is bound to go down. I'm sure there's some short interest in here. I'm sure there's some other things. I'm sure, this stock went from $110 to $3. Could it go to 5? Yeah, it would suck if you were short this thing at 368 and it goes to 5 on you. So, I mean, I'm not saying it's going to 5, but I'm just saying you got to be careful shorting anything. But am I sticking Stitch Fix in my long-term portfolio? No. Do I think, there's a long-term story here? I don't know. I think a lot of these $3, $4 stocks just continue to leak and go lower. So I think there's better places for your money. I'd just be careful, shorting anything here right now because the bulls are in control.
One thing that I would say about not Stitch Fix, but I got to give you a shout out, Dennis. You were right. I was wrong. I love to always point it out. And why not, right? Because that's how it's going to be sometimes. Macy's, baby. You weren't that bad. Not bad.
Well, I haven't been looking. Look, it did. I made that call. I didn't even look at it again.
It reversed. And I saw a pretty strong day yesterday from KSS. And Macy's. And I think this was kind of more of what you're saying there. Everything rally, even a stock like this starting to come back.
Yes.
And it's not that it gave the best report, right? I mean, it wasn't looking great, but still coming back, right? And I think that's something that we got to keep an eye out.
It was the bathwater. Like, it's gotten to a point where valuation is low enough. I was even saying, even if they hit the lower numbers, I think we're still trading 6 times earnings. This valuation just got too extreme. Bearishness is too extreme. It felt like the capitulation event. It was down in the pre-market. It hit, I think, $12 or something. Had bounced off those lows and was holding around 12.80, 13. And that's when I said, I think, a buy at 13. I think this thing could see 15. Well, it saw it the next day. Now it's 16. So, I mean, that was kind of like an easier call for the capitulation. Wish I would have traded it.
I know you did.
But
I'm sure you did.
There's so many things we talk about, and we talk about it for a minute, and then I move on and don't think about it again. Like I said, I need to start re-listening to the show because we give so many trading ideas, and then we don't utilize those trading ideas, like Unity. Like when I screwed up Palantir, but there's so many that we actually talk about. I'm like, oh, I like that. And then I just forget. Fiverr was the same thing. I talked about this in the show, and along with Sean Emery, and and I was like, oh, I like this too. So same thing. I mean, we need to start re-listening to our shows.
I agree. And I think sometimes it's very important to kind of catch and then also reassess what's the current environment. Did I have that outlook correct? And then of course, looking into the open. Let's keep going. Let's get to one last one here. I want to talk about Dave and Buster's. Who's playing out there? Surprise beat on EPS. Let's take a look at play here.
Nice.
They got into Q1 EPS here at $1.45, beat the $1.24 estimate. Sales of $597.3 million, missed the $601.71 million estimate. Surprise beat on EPS, a miss there on sales.
And again, you're in a similar situation in the Macy's. We've just been so oversold. Valuation is cheap. I mean, if we go into recession, are they earnings going to go down? Yeah, but we don't know if we're going to do that. You have so much support in the long-term chart, 30 to 32 on this thing. And it was holding the recent support of 32 very well. So now you get the earnings. It moves it higher here. I'd be careful shorting this too, because it could be follow through. There are people out here looking not only for AI plays now, but for looking for value plays. They're looking for everything. And that's the IWM. The IWM is not AI. The IWM is everything else. Everything else is rallying in the last 3 days. So keep that in mind. Bulls in complete control.
Also, it's summertime, right? I mean, if there's anything that might get a little lift there, I'm thinking maybe play in the summer, right? I mean, parents looking where they can take their kids in the summer, right? Well, I think Dave and Buster's is definitely on top of that list. All right, let's go ahead. We're going to get out of this conversation. In a second, we'll get to Ryan Craver, our interview. I did want to kind of mention, I think you caught an interesting news there in Marvell, Dennis.
Yeah.
Let's take a look at Marvell. Marvell is one that's been sneaky. And I think this is a very similar pattern that AMD had yesterday. It already took off, so it kind of seems like hindsight 2020. But I've talked about this on Start Swing Trade yesterday, and how the 9 EMA setup on pullback seems to be working very well. So stocks that had gaps up, that are coming back towards like that gap support, holding around the 9 EMA, looking for moves higher. Very similar move yesterday on AMD. I'm looking for maybe a repeated move there on Marvell, and already seeing that lift there.
We're and just giving you the news here from Christian Fromhertz, just tweeting it out here. And obviously this came, from multiple sources. We've got Bloomberg reporting this as well now here. It sounds like there's a Taiwanese press that is saying Marvell has won the contract for Amazon's second generation AI inference ASIC chip. So that is the reason for this rally here this morning. Again, technicals are the reason here too. You had the little pullback. So, it went ridiculous. Rocket ship mode 45 to 68. Then we had a pullback and a check, almost a 50% retracement of the recent move, 57. Now it starts to lift here again. So, I do think these chips, and this is another AI play here, more of a pure play, not pure, but more pure than like booking. So, I mean, you're going to see these even pullbacks get bought. You wonder if Micron, and again, this is obviously Marvell's its own thing, but Micron, similar chart, breaking out. We know chips are hot here right now. Breaks out to 75, pulls back and checks back to 67, 68. Micron's kind of sleepy here. I wonder if MU doesn't try to get a lift. Now, obviously, this isn't the headline for them, but I wonder just from a technical perspective if this isn't a buying opportunity for MU here right now. I don't have any position.
I think it's something to keep an eye out for. One thing is very similar, right? Very similar patterns. Stocks that have popped, that have pulled back, gone sideways, and that gives us an ability to at least have a level to risk on. I will be looking at like 67.50s. You can see the low on Tuesday, 66.82. So maybe it's 67, but you can see in the pre-market, we've already kind of made a move here towards 68. Maybe pullback opportunities looking for on Micron and Marvell. Very similar patterns, right? Stocks that have popped, that are going sideways. Very similar also to NVIDIA. NVIDIA is near that same looking chart, right? They're all kind of similar. Gap ups, sideways action. See if they resume. A lot of times when I see a stock gap up, I wonder, does it quickly go into that gap? If it goes sideways on that support, it seems like that gap is acting as support, and then it could push higher. We'll see what happens to these stocks. All right, getting out of our conversation today, we still got some more conversation to get into, so don't go anywhere. But we have our guest today. Smash the like, guys. Let's get to our guest. Craver, retail expert, founder of Conference Canal. How we doing, Ryan?
Doing well. How you gentlemen doing? Good to see you this morning.
Ready to get after this market, of course. And I know that you've been keeping a close eye on a favorite out there, especially retail favorite. I felt like it gave a real generational opportunity, but let's talk about Amazon.
Amazon, they came out with some numbers that, were down relative to where they've been prior years, prior quarters, but you just can't get around the beast. They continue to grow. Probably the largest moat in the history of retail. I can't deny how much traction they've gotten, how much longer they're going to continue to be the major provider for most of the retail growth. If you take a look at what's gone up here, you see a decline in the overall year-over-year growth rates, but they're at a scale now where they are the Goliath, and if retail goes down, they will be the ones that will be hit. But if retail goes up, they will be the ones that will be the benefactor of that. So whether you look at their advertising, their stores, their actual online stores, anything around AWS, all of it is doing relatively well. And I can't get around them.
They're just a player in everything. We had a rumor breaking the other day that they're going to get into the telecom industry here. Ryan, they just are in everything here. It's hard. And people will look at Amazon and say, well, the valuation doesn't make any sense. It's trading 70 or 80 times earnings. It doesn't make any sense. But again, I've argued before that even you look at the sales metrics, price to sales, Amazon's not trading that bad. And when you look, if they, stopped, focusing so much on growth and started focusing more on the bottom line, that they could grow that bottom line very quickly if they wanted to here. I am long Amazon, full disclosure. I just think like they're just in everything. This is just one of the major players in the world in every industry. It feels like it's not just a retailer anymore. Think about AI and the growth they're going to be participating there as well. What are your thoughts here? Just one, on Amazon valuation, and then two, how big is AI going to be for Amazon?
Yeah, like you said, they're the toll booth of e-commerce, the toll booth of internet. They've got some sort of play in every single thing that they're doing. The only thing that I would say that they've probably needed to pull back on because of failure is China. But that's pretty common amongst many of the major tech players. Valuation, I'm a long-term holder. So I'm talking my book here. It's also a big driver of the revenue that we bring in. So we're running several different major brands on Amazon. I think you continue to accumulate and you buy. To your point, they just have so many levers. If the advertising business slows, they make some changes on the AWS business. If the AWS business slows, they make some changes on the advertising business or the seller services business. They just have too many levers to pull and manipulate Wall Street.
Now, I want to ask you a little bit. You just mentioned on China's struggle, but what about international growth overall for Amazon?
Yeah, you hit the point right in the head. They have struggled, but they have seen a little bit of improvement. You'll see that yellow line more recently. I think if we look at their international business, the UK and Germany has done quite well for them. They still do have some major incumbents that they're fighting. Believe it or not, companies like eBay are still very strong in Germany. But I think that prime effect really has taken hold and will continue to take further hold, similar to how we've seen in the US. And then the big question is what are they going to do in India? India's got some major players as well, but if they can get that market completely churning like how they've got the US going over the next decade or so, they're going to be playing the best demographic profile of any country in the world right now in India.
Truly interesting to definitely keep an eye out on that international sales growth. If it could get any spike, I I'd definitely be interested as an Amazon investor looking to get in. I missed this opportunity below 100, definitely kicking myself for it. I want to talk a little bit about online sales. Of course, they've been essentially flat now, and this is majority of where the sales come from, right? I mean, I know because I can just look outside and I'm sure there's an Amazon package waiting for me already. But talk to me about this, Ryan. How we looking?
Yeah. So to Dennis's point, they no longer care about being an online retailer. They just care about being the toll booth of e-commerce, right? So if you look at their services play, it's very similar to where Apple was 5 to 7 years ago when they were starting to focus on cloud and things like that. They're focused on the services business, much higher margin, much easier. They don't have to take on inventory, and it's a cash flow positive business. So the third-party seller services means that now they're just using the site to sell product for other sellers. They're no longer taking in the product, owning it themselves, advertising. They're selling real estate on a web page, and then AWS. They're fueling the startups, the existing startups of today and tomorrow. So who cares if their online sales aren't growing? As long as their services business is, they're in a good place.
All right, let's get out a little bit about Amazon. Let's talk about retail overall and the AI bubble that we're seeing. How will AI play into retail here, Ryan?
I think AI is going to play for the tech providers, the guys that are selling the ads. It's going to play for the AWSs, the Snowflakes of the world. In terms of just general retailers, so you guys were talking about Macy's and you were talking about Stitch Fix and others. I don't think it's going to play a huge role, to be honest. The role that it's already been playing is kind of there. They may be using it for forward forecasting and things like that. But to see Macy's develop a chat bot that is based on AI, yes, we'll see stuff like that. But I don't think it's going to play a huge role in our traditional brick and mortar retail. To Dennis's point, it will play a big role on the guys like Amazon who are running the AWS. It will play a big role for guys like Snowflake who are running some of the startups that are tied to retail. But traditional brick and mortar, I don't think it's going to play a huge role.
Let's talk traditional brick and mortar just here for a second, because have we gotten to a point, and I made this argument last week with Macy's correctly, that I believe, we just got to a point where it's just so oversold that a lot of this bad news is priced in. And they came out on their quarter, and the quarter was not good, and they lowered the guidance, and it was a mess. But I was talking on the show that day, I'm like, even if they hit the lower guidance, I mean, the thing's trading 6-7 times earnings. Did we just get to a point on brick and mortar that maybe it just got, too cheap?
Yeah, I think we did. With that said,
yeah,
there's no possible catalyst I can think about for a Macy's of the world over the next 5-10 years, right?
Yeah, the long-term trend is not your friend here.
Right. So you're either playing with those that are opening new stores or have positive comps. A company like Five Below continues to open more and more stores. You see a growth trajectory there. Costco, you still see, even though they posted the lowest comp they've posted since 2017, I believe is the date. They continue to be one that's more productive with the spaces that they have. And then you've got even those that are showing an even worse profile than Macy's, the companies like Foot Locker, they're truly struggling, and they're also trying to loosen their dependence on companies like Nike and Adidas that has the issues with Yeezy and things like that. So at traditional brick and mortar retail, there's really only those that I think that are growing their store count that are worthwhile if we're thinking about growth. Now, if it's for a trade, like you said on Macy's, yeah. Brick and mortar retail is depressed. It's pretty bad looking out there.
Yeah, I think you're right. I think, things get oversold, but the overall trend's still not your friend here. And, if you're coming in here and putting all your money into brick and mortar, I think you could have a balance here with the IWM. And I think, it's nice to see value names start to pick it up. But I do believe, I think you've got to look, here at, the overall secular decline of brick and mortar retail is just not a pretty picture here. And I mean, things have just changed. People buy shoes from online. I mean, I personally would never go and buy a pair of shoes online, but the younger generation is not afraid to do that. Even my wife, she buys clothes online. She buys this online. I'm like, how do you know it fits? Like, how do you know the
Yeah.
shoe fits?
You can
Like, I wanna go
return
and
it.
try
It
the
doesn't
shoe on.
matter.
But
It
I'm old
doesn't
school,
matter, right?
so I mean, I get it, you know. And now it's like, oh, well, why am I going to bother going to the mall? And you know, and it's just things are just done differently here now, and that's where brick and mortar is really struggling.
Let's look into a little
Yeah.
future outlook on that, Ryan. What do you think in the, let's say, 5 to 10 years? Are we just going to see all just D2C models, just direct to consumer models versus having a big brick and mortar?
I mean, I think the trend will continue. We'll continue to purchase more and more on e-commerce. We saw it accelerate through the pandemic, and it's kind of come down a bit. But I can't see how this doesn't change. Dennis, you are one that is probably going to go away over time as it's easier and easier to buy these products online and return them.
Yeah.
You know, we talk about shoes. Shoes, if you buy from Amazon, you can return it to any Kohl's, you can return it to any UPS store, you can pop it back into UPS or into FedEx to return it. So they make it so darn easy to buy and return it. The problem is that there's a lot of returns. We sell a lot of shoes online, and we see anywhere from a 10 to 16% return rate.
Because they don't
that has
fit.
to go right. Or someone's buying multiple sizes, or they're willing to go through multiple waves, and none of that money is free. So, free returns are not truly free, and free shipping is not truly free. It's baked into the cost somewhere.
Where are they going to return these shoes if Kohl's goes out of business? There's the question here, because you can return to Kohl's, but holy cow, I mean, this KSS, and I was along this thing for a long time incorrectly. It's got a 9% dividend. You're like, wow, that's a nice attractive dividend, but holy, has this thing just been a dumpster fire of a stock? I don't know the company as well. Like, I know what they do, but the dumpster fire of a stock is undeniable here. We were talking about a buyout at 65, 50, 40, 30, 20. I mean, I'm out of it here now, but wow, this is just not pretty here. Is there, and I see Nordstrom, we could go to that conversation too. They're talking about closing stores in Canada. I mean, where are they going to return all this stuff if these other brick and mortar stores go out of business?
Fair point. I guess.
Or maybe that's why they stay in business, for the Amazon returns.
Fair enough. It's UPS stores and FedEx stores that are probably going to start to take the majority of the returns. I said about a year ago, I wouldn't be surprised if maybe banks start taking returns. There's only going to be so many brick and mortar stores left. Kohl's, there's nothing positive I can see. Maybe they have an activist shareholder come in to try and take them private, but that's going to load up a bunch of debt on the sheet. Maybe they have an activist shareholder to come out and have them spin off some of their brands, but there's just no positivity. You'll remember at Nordstrom, we had the family try and do a takeover, and that failed. But these companies are continuing to lose their value, and all they have left is the brands that they sell or own and the boxes that are productive. Beyond that, it's not looking very good in retail relative to the stalwarts like the Amazons and the Shopifys.
My last question, Ryan, would go to more like ad tech, right? Of course, we've been seeing how AI has really been jumping. And I think that ad tech and AI have really two things that will merge together here. How do you see this, Ryan? And could you see any companies that could get some benefit opportunities off of this?
Yeah, so that's a huge one, Mitch. We've been seeing it for years, right? So a lot of us in the industry are like, hey, everyone just all of a sudden woke up to ChatGPT. Yes, ChatGPT was a new offering. However, we've been using AI for pretty much everything that we're doing in terms of ad tech, right? I think if you look at the Googles and the Facebooks of the world, they are taking more and more of the autonomy of the brands to sell and market their brands online. So you're now forcing more and more into these tools, and they are running the dials. You're just telling Facebook, hey, I want to spend a couple $100 on this particular ad. They do everything. It's all AI driven, cookie based driven for the most part. And I think they're going to continue to do that and continue to apply AI as best they can and give us the highest possible return for the highest possible cost per click.
Yeah, definitely. Our data is going to be important. Ryan Craver, retail expert, founder of Commerce Canal. Definitely check him out. I put his Twitter in the description below. Always good to have you on, Ryan. We'll have you next time. Appreciate it.
Cheers, guys.
Thanks, Ryan.
All right. Let's go ahead. Let's get back to, of course, let's go to our TradeZero segment. Take a look underneath the hood, see what gappers are up. If you guys got a stock you guys want to check it out, definitely this is your chance. Throw it up in the chat. All right, net change up. Let's take a look to see what's standing out here. And of course, you see Netflix showing up here. And why is Netflix up today? Looks like there is some upgrades here. JP Morgan maintaining overweight on Netflix, but raising the price target to 470. So it was just a maintain, but a price target raise to 470. And this has really taken off since kind of that 330 pullback. Where do you see Netflix?
I'm telling you, the reason for Netflix is, and they're starting to talk about it, it's this, and Oppenheimer here's Oppenheimer comments too. There's, from yesterday. So this is multiple people. This is from yesterday. But they're talking about, adding, that Netflix could add 9 million paid subscribers due to the password crackdown. I mean, this is what's happened in Canada. I talked about this 6 months ago. You got to go break down. You got to go actually buy Netflix because you can't share it with 5 of your friends here now. So, I mean, I think subscribers are absolutely going to go higher. I think this is a smart move by Netflix to crack down on this because people were buying, a Netflix account and sharing with 4 of their friends and basically just free riding off of one account. That is gone here now. So you're going to see subscribers go up here on Netflix. I think Netflix is a buy on all pullbacks here. I sold it back when it was 300 or whatever, 320. Wish I would not have sold it. It was obviously, when it got down, I talked about this. When it got down to 170, I tripled down on my original position, and that was a really good move. Wish I would have held on. I think Netflix is a buy on pullbacks. I think the subscribers go substantially higher for the same reasons Oppenheimer's site is that you can't share your password. So people are like, okay, well, $15 a month, I'm just going to go pay for it.
This just shows me more and more Netflix still best of breed.
100%.
Nobody wants anything else.
Nothing
but
competing even close. We thought when Disney Plus came out that Disney could have the content to beat Netflix. They have not put enough investment dollars into this. They have not focused. They've done everything wrong. There's nothing to watch on Disney Plus. This has been the problem we've talked about for a year and a half. I subscribed to it and I was like, oh, this is great. I'm watching all these old movies. I'm watching all this stuff. It's great content. Disney comes out with good stuff. Some of the Star Wars stuff, the recent stuff's been crappy, but they come out with pretty good stuff. They just don't have enough of it. Netflix has got new stuff all the time. Yeah, 80% of it's maybe junk, but at least there's something to watch. And then, they get the odd Squid Games or something like that, which is addictive. I mean, we're at a point here now where nothing is even close to competing in streaming with Netflix. Nothing even close. So, I mean, Disney has dropped the ball here. They need to figure it out. You can talk Hulu's and all the other ones. Yep. It's not even in the realm of closeness to Netflix. Netflix is dominant in streaming, and they're going to continue to remain dominant in streaming. And now their subscribers are going to start going up because of the crackdown and password sharing. Netflix is a buy on all pullbacks, in my opinion.
I think all Netflix needs to do now, and I talk about this, is just transition into having some TV channels on there. And man, would anyone go away from Netflix? I don't think so. All right, let's get out of Netflix talk. There's one that stands out to me here that's interesting. I've been having a lot of people talk about it. The growth stock that is Wayfair, right? What about Wayfair? Really starting to push off this 36 bottoming area now towards 52. It's been a big run already. What do you think about Wayfair, Dennis?
Again, we're in this market that's starting to turn stuff around. Dogs are barking. Wayfair's been in the gutter here for a long time. 30 long consolidation period. We talk about the hook. We're hooking up here, the hook. So, I mean, on pullbacks here, yeah, I think Wayfair is a buy here too. So, I mean, there's just a lot of stocks here that are perking up. A lot of stocks that are looking a hell of a lot better. A lot of stocks that we've been calling, on some of these too here, Money Mitch. Yeah. I mean, we're taking a lot of heat from the chat here today. I mean, the haters. What I got to stop doing is to stop acknowledging it, because they know they get to me. So then they all come and they really start going at you here. Oh, yeah, Dennis makes every wrong call. Dennis can't call anything right. For some reason, I make money every month. I don't know why that's possible, because I call everything wrong. I'm 100% wrong all the time, according to the haters. But for some reason, I make money. So I don't know how that is. I must be figuring something out, but because I'm such a terrible market caller, I didn't call Palantir. I didn't call, the recent rally and a lot of these other stocks here like AMD. No, they don't mention that. They mention, but he said Moderna. Yeah, I said Moderna long, BNTX short.
You know what I say about that?
They don't mention that part. He said Moderna long, and they just cut out and lie about that I didn't say that. Some of these people just want to piss you off. It's their job. They feel good about themselves because maybe they struggle, and they want you to do bad because they want you to do. So just ignore the haters, and they get to you, man. Because you know what? I have like 100 people tweeting at me a day. I'm not joking. My Twitter timeline is 100 to 200 tweets a day. That's what comes at me.
What I would say about that is
1 or 2 people that won't stop, and they just keep, and then you eventually have to block them or do something. Like I'm talking like 80% of Twitter is good, but you got like 10% that literally just go out there. Their job, when they wake up in the morning, like, who can I piss off today? Those people are just assholes. That's
the thing is here, Dennis, one thing that I've noticed, and I noticed this from a lot of traders out there, Dennis, they have this need and search for what? For perfection. There is no perfect trader out there. There is nobody.
I don't think it's perfection. I think there's just people who really like get excited by pissing you off.
Especially for like one thing I've seen, at least for people that talk about stocks, is that they almost expect them to be right every time. And then when they're not right, they just want to push on that, right? Like, hey, your accuracy was wrong here. The truth is, I think Dennis and I only care about our accuracy being good enough to make money.
52%.
That's all we care about, man.
52. I'm going to be wrong on any given day. I'm probably going to be wrong almost half the time. But if I can be right just a little bit more, or if I can, you know what, you can be wrong even more than you're right. But as long as you cut your losers and let your winners ride a little bit, you can still be successful. The whole name of the game here is discipline, admitting when you're wrong quickly, and changing your opinion. That is all trading is. It's not about accuracy. And people who say, I'm 100% right all the time. You know why? Because they probably don't take losers. They just hold on to losers and say, well, they come back eventually. So I've never had a losing trade. We'd have people come in to the Bright Trading office, interviewing for a job. You won't believe this. I've never had a losing trade before.
Ever.
Never had a losing trade before. You won't believe this. I'm 100% accurate. It's because they hold on to all their losers, and they don't consider those losers. Those are paper losses. And then eventually most of them come back. But what eventually happens is you get a portfolio of losers that way, and eventually it erodes your capital because you can't be right 100% of the time. Cut those losers. We're going to be wrong. I wish I could be right 100% of the time, folks. I wish I could only, give good trading, and all good ideas, all positive ideas, but we're going to be wrong.
That's part of the game, man. Part of the game. Now, Roku is a stock that I'm keeping on watch. I think this could really start going. I know that a lot of people don't believe in the story. I don't think I even believe in the story either. But what do I believe in the story of? I believe that growth stocks are making their way back. And this is one that's been starting to get going. Recently had a move to 76. So looking to see if we can get above kind of like these resistance right here around 66.50s and 67s. But doesn't look too bad right now. Started to make a move. I've been talking about Roku.
And don't forget that Netflix is helping this. Yeah. Netflix is helping the Roku. So it has multiple things going for it right now. One, it's been sleepy. It has not participated in the recent rally. ARKK perking up. Roku's part of that. That starts to help it too. And the Netflix story helps Roku as well. I still don't think Roku is your streaming play though, because I think it's just, the one trick pony. And I think as they build it, and Roku's again built into TVs too. So there is still the play there. But if you want to play streaming, I still like Netflix better.
We'll see what happens here with also, I think this is an important one to take a look at tonight, reporting earnings. Could GameStop talk AI tonight?
Probably.
They have earnings tonight, Dennis, and you know how they are about buzzwords, man. They don't like to miss many.
They never talk more than a minute or two. They'll probably just say AI 10 times and then quit the call.
All I'm saying is
it's up. So here again,
I wouldn't be
folks,
short it. I'm not.
Here
I'm
again
not doing
is
it.
one of my core strategies working. I give this strategy to you. We give a lot of good tips on this show. Being long stocks ahead of reports. Long stock, long GME right now. If you're long this ahead of the report, you're making 7.53% here this morning. Is there a headline on this? Got to
No,
be
I think
something.
I think they just know, man. They see the
But I'm
earnings
telling
coming.
you, there's
Let me
just
see.
alpha to be extracted from being long stocks ahead of earnings reports. It works.
Yeah,
Selling them
it
before, because the
definitely.
report is a gamble. But you're long right now. You didn't take the risk, and you're up 7% here already. So another one of our core strategies, paying the bills.
We'll see what happens there on GameStop. They report tonight, and definitely smash the like, guys. If you guys want to take an extensive look into some shorts and you guys are looking to try to get some locates, definitely check out TradeZero's flagship software here, Zero Pro. I'm going to throw it up in the chat here. Like always, you guys can check them out to see some of these shorts that we have. And let's go ahead. We're going to wrap up the market here, pulling this down. Let's talk a little bit about what are you seeing in the market overall, Dennis? What will you be looking for
Mixed
today?
again here today. So we're seeing, and obviously SP is only up 0.11%, but we're seeing a little bit of continuation here. I mean, you're getting the dog tech, like the Kathy type stocks barking. A firm here today. A firm ripping higher here right now. I'm not sure if there was just a headline here that broke or not, but it's up 12%. Another one that was sleepy, kind of going nowhere, not doing much here, and all of a sudden, boom, 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 a firm. It's up 8. It's up. It's really ripping right
Rising
now.
support lines, man. Rising support lines. I've been seeing these. Yeah, there has to be something news for sure. And this is
probably an AI headline.
Amazon Pay adds a firm providing customers and merchants with another flexible payment option. So looks like Amazon,
they're adding
and a firm
to Amazon. That's a huge headline for a firm. That is a
there
huge
you go,
headline.
guys.
That's from Bloomberg.
Yeah,
that's a huge headline for a firm.
And I think this is very important to look at. We were talking about this stock just a little while ago on Start Swing Trade, looking for stocks like this, stocks that were thought as going to zero that are turning around because of the environment we're in. Carvana falls under that name, right?
Yeah, it
Upstart
does.
falls under that name.
Yeah, it does.
Stocks like these, we're going to keep an eye out for because they can run, man. So many shorts piled in on this, and I think the shorts are just watching themselves
you have
get
to be
squeezed and pulled out.
You have to be very cautious shorting anything right now. We're finishing the show with what we started the show. We talked about being very, very cautious.
Yeah.
With obviously we talked about being very cautious here with shorting stocks here right now. You've got to continue to be very cautious shorting stocks here right now.
IWM, right? Started to get these smaller caps also making a move, right? And we got to be careful with names like this. There's been so many names that we've talked about, like that were like zombie names that we were looking to go to zero and now might not, right? And I think that it was a survival period. You could see some of these stocks really start to lift. That's why I've been looking into the gutter, seeing what could get a little bit of a lift. I still have LAZR that started to make a little bit of a move. I'm looking for stocks like that, like let's say like a forgotten favorite like QS. Look how that's starting to get a little bit of a move. I don't have a position in this, but stocks like this that have been in the gutter, that are favorites, right? Even a stock like a favorite on Kathy Wood. She's been loading this thing up like no tomorrow. Look at DNA. Look how it's just sideways, kind of stair-stepping its way back higher. So be careful with these names, of course. They're not the best outlook, but they have been turning things around. And I think these are also names with high short interest that could keep getting pushed or shorts kind of covering here. That's going to do it today. Definitely keep it up with Triple D Trader. You guys know my man. Keep up with all the action. He definitely puts out some great tweets. So if you don't have him on Twitter, you're missing out. Last comment, Dennis.
We're seeing a very mixed market here today. I'm just trying to process this, the firm headline here. Obviously, we got the big pop pulling back here a little bit off those highs. It's growing crazy here right now. They just mentioned on CNBC too. What this means for the other payment providers. I'm trying to like process all this right now here. Obviously this headline just broke 5 minutes ago, so I'm just trying to think about it. So I'll probably have thoughts later on today.
Hey, there you guys. Keep up with Dennis Dick, Triple D Trader. You have a good one, Dennis. Take care. I'll see you tomorrow.
See you guys. Thanks, everyone.
All right, we're going to wrap up and bring you guys over, of course, to live trading action. That's coming up next. Don't go anywhere. We'll keep going. We'll get into some trading action. And who knows? I might get in a firm trade in. Who knows? I still got Moo. We'll see what happens. See if I'm able to nail this type of trade. Come over to live trading. That's starting up right now. Don't go anywhere, team.